I think the prospects are extremely good. The relationship in the paper markets is quite simple. When gold starts running higher, silver runs almost twice as fast on average. So now that we see that gold is breaking out into the upside, we're talking about the price of it in dollars, then on that basis, I think we could well see that silver might catch up and run back up to that $26 level. So hopefully you'll feel a little bit more wealthy as a result of this. And on that basis, I would think that the price here is too low.
On today's market recap, silver surge sparks speculation over potential super squeeze. Silver has recorded its largest gain in months, sparking plenty of excitement on social media and other investment platforms that the move may be the start of a prolonged price rally. Alasdair Macleod highlights that silver is not Bitcoin, but while supply and demand fundamentals explain much of the move in Bitcoin, it's drawing along to suggest that has implications for the silver market. There's no halving of supply impending, while demand is largely reflective of trends in industrial and jewelry manufacturing. Alasdair Macleod also talks about the gold rally, but the move in precious metals comes across as momentum rather than fundamentally driven, at least in the near term, meaning it could reverse just as fast as it started. Gold and the silver price have been surging in the last several trading days as markets expect the start of rate cuts, which is driving cash from bonds to commodities. Now we'll show you more clips of Alasdair, but first subscribe, and turn on notifications. Also, check our link in description for some massive sign-up bonuses. Enjoy the video.
It's been a fascinating market because what's driven it to new high levels is really central bank buying, demand from the Far East. I mean, China. Bear in mind that the Indian economy has been growing at an enormous clip, and of course is creating, ultra high net worth individuals. Now, do they import their gold into India? No, they managed to get resources outside India, outside any exchange controls. And I should think they're probably stashing their gold in places like Switzerland and maybe Singapore. The demand from Asia is only just really starting. And also driving the price is the weakness of the dollar. We're suddenly beginning to realize that the dollar has got a debt problem. We've seen, goodness knows how many people remarking that in the last 100 days, outstanding treasury debt has increased by a complete $1 trillion. And people are beginning to realize that in this current financial year, you're probably looking at 3 trillion of new stock, plus about, I think it's 7.6 trillion of refinancing. Now, who's going to buy it? This is a problem. And of course, we've been talking about this for some time, but you can see how it's a situation which leads to loss of credibility in a fiat currency. It's actually as simple as that. It's not so much gold rising, it's the dollar going down. Now, most people would think, well, the dollar is actually pretty steady. The trade weighted is 103.4 or 6 or whatever it is. But we're not talking about the dollar against other fiat currencies. I mean, it is the king of fiat currencies. We're talking about the complete fiat currency cohort meeting a problem. Now, that 3 trillion of borrowing in this current fiscal year, which takes us up to September, assumes that the US economy isn't going to slip into recession. Well, I tell you, it's already in recession. The only reason that the GDP numbers look good is because of the money printing or the credit printing by the Fed. Well, yeah, by the Fed, if you like, and the US Treasury. The US Treasury is spending this money into GDP. It's not productive. So the idea that the economy is looking good is not at all true, and so I would be very, very surprised if the US economy doesn't actually go into a deep slump. So what does that do to the borrowing requirement? We're looking not at 3 trillion, but we're probably looking at somewhere 4.5 trillion. And then you look at interest rates. Are interest rates going to go down when all this funding has got to happen? No. And not only that, but banks are still running scared of lending to small and medium-sized businesses. I think the prospects are extremely good. They are so out of fashion to be ridiculous. I mean, we have gold. We've had gold sort of knocking on the 2,000 level, and now, that's certainly support, and arguably even 2,100 is now support. And what's gold? What have gold mines done? Very, very little. I mean, the HUI index, I see it here as 220, having been down to something like 198. I mean, okay, it's up 4.5% today, but this is, it is crazy. In terms of stock market valuations, of course, all the fashion is with the tech stocks. And the result is that mining stocks are just completely ignored. Not only that, but they have been out of favor for so long that mainstream investment managers actually haven't got a clue how to value them. So they really are lagging behind the curve. And my personal view is that it'd be worthwhile looking at, the sort of, if you like, the majors. I mean, just go for safety. You don't need to be terribly clever. Don't start going for 10 baggers and 20 baggers,
In today's market recap, global silver demand forecasted to rise to 1.2 billion ounces in 2024. Buoyed by strong industrial offtake, global silver demand is expected to hit 1.2 billion ounces in 2024, which, if achieved, would be the second highest level ever recorded. This amount would also be a new annual high for the industrial sector, according to analysis from the Silver Institute and precious metals consultancy Metals Focus. Costco's move into selling Silver Eagle coins to members is the latest move of the warehouse retailer to sell precious metals. It follows the company's entry into selling 1-ounce gold bars in early 2023, and by the end of the year, they had sold over $100 million worth of gold during the third quarter, according to company official. Silver has found the $22 level to be extraordinarily supported multiple times in the past, so it should not be a huge surprise to see that it has happened again. The $22 level for me is a major barrier that seemingly is very difficult to break through to the downside, and therefore I think a lot of traders are just simply taking advantage of cheap silver when they see it. But first, subscribe and turn on the notifications bell so you do not miss out on our daily videos, and check our pinned comment for some very special sign-up bonuses. Enjoy the video.
I mean, silver basically, once gold starts running, you'll find that silver runs approximately twice as fast. The problem with silver is that when gold is not running, I mean, gold can be moving sideways, then, the price can decline. And we've seen this. I mean, we saw silver running back down to 22, 21 something, having been up to 26 when gold first hit that high at I think 2070 in August 2020. It's a difficult one. I think the problem also with silver is that no central bank regards silver as a monetary metal for the purposes of its reserves. It is an industrial metal. Now, I would argue that as an industrial metal, it's actually got enormous qualities. And on that basis, I would think that the price here is too low. Gold is a pet rock. It's all, that was all yesterday's stuff. And because, I mean, this is propaganda, which has been put out since 1971 to try and establish the dollar's position as the reserve currency par excellence. And so now, I mean, there is a sort of growing realization, and has been for a few years, that the current fiat currency situation allows governments to print like billio. So Bitcoin came along, and that's now meant to be the alternative. But I mean, quite frankly, when you look at Bitcoin, what does it correlate? True. Does it correlate with gold? No. But then, hodlers would say, well, no, it's the new gold. So of course it's not going to correlate with gold. But I tell you what, I put together a chart, which I think you've got a copy of. Basically, what I did was I put together 7 tech stocks, and it was, if you like, the monikers are down there on the bottom in the tech index. And I rebased it to 100 on the 24th of February 2020, which roughly is when the bull market, this current bull market phase started, both for these tech stocks and also for Bitcoin. Now, Bitcoin is a red line, and you can see that up until, I think it was about October 21, there was a bull market in both. The correlation was perhaps not all that tight, but you can see that underlying bull market. And guess what? They turned at exactly the same time and then started going lower with a reasonably high level of correlation. The bear phase then ended, and it then turned round a year and a bit later. I think it was October the 22nd, that second dotted line. And then we go into a new bull phase, and the correlation is there. And if you look at the correlation in the last few months, I mean, it's very, very tight. So what does that tell us? It tells us that Bitcoin is behaving like a tech stock. And what's been driving tech stocks? Well, tech stocks are in a bubble. I mean, I would contend they're in a bubble. And if you get higher interest rates, as I've just described, then tech stocks are going to crash. It's as simple as that. So where does that leave Bitcoin? Does it leave Bitcoin with this sort of wonderful idea that, because the dollar's going down and it's being printed in ever greater quantities, that, it's going to go to 1 million or whatever? I mean, this is what the hodlers tell us. No, it's a tech stock, for goodness sake. It's mirroring the bubble in the tech stocks. So when the tech stock bubble bursts, I think you'll find that everybody who's in Bitcoin, and this has incidentally been hastened by the new ETFs, Bitcoin ETFs, which allows hedge funds and managed funds, if you like, to speculate in Bitcoin, whereas before they had difficulty persuading their compliance officers that this was a good idea. Now, of course, they're listed. You can go in and you can buy the things, you can punt away, and my goodness, look at the volatility. Isn't it wonderful? I mean, if you look at it, it's just shot up from something like 200 in recent months on this scale up to close to 350. I mean, that's a tremendous move. Wonderful stuff. And if you can leverage it, so much the better. But all these bubbles do come to an end. And what this chart is telling us quite clearly is that Bitcoin is a tech bubble. It's as simple as that.
What do you think of Alasdair Macleod's take? Do you agree with him? Is silver the opportunity of a lifetime, or will Bitcoin outperform everything? Post in the comments section down below your opinion. Subscribe if you have not yet done so, and check this video right here because you'll love it. I see you on the other side.